I'll go to the edge of the trading floor with Scott Gecas, Walsh Trading. Scott, in one word, how would you describe all of this information that we got in the WASD?
Bearish, obviously.
Yeah, that's what the trade has been talking about. I want to look at these numbers here and get your thoughts on support levels now. We'll go to the corn market here first. The reason I mention that is because I talked to one trader earlier today that said we've got the biggest and the worst of all of the bad news out there on the table now. And there a little bit ago, we went down as much as 5 cents. We all got all the way down to 345.5 in the July contract, Scott. And now we're down 2 1/4 at 351. So we come off of the low here. December 371. That's off of the low of 365 3/4. So 4 1/4 cents now, down 2 pennies. Is this a sign that maybe the corn market thinks that the worst of the news is all out there?
Yeah, I think with the news and a bearish tone completely, to the downside, I think now we're starting to find some common ground, some little support. For the corn market, we were watching that 350 level. We've seen it break it, had a little bit of follow through and then snapped right back. So we're going to see where that's going to close, all the way through. The option volatility is you're seeing two-sided market. You're seeing a very heavy call skew to the upside calls rather than downside puts, which makes sense because of all the bearish news that's already came out. So hopefully this is the worst yet to come, but we have yet to see what's going to come out. Everyone I've been talking to, clients across the country, as well as the traders on the floor, everyone's expecting to see something due to the headline risk coming out to play. The Trump trade war, that soap opera still continues. We have headline risk still with the trade war talks breakdown. We expect something to either come out overnight or within the next few days that either they're going to go back to the table or just, some type of headline where we can get some type of common ground or even maybe a little bit of a bullish catalyst.
Okay. On that note, then, let's talk about soybeans. And the soybean price, it was on two-sided trade, just like you mentioned. Now we're back to a half a penny higher on the July. We're up 1.5 over here on the November. Is that in hopes that maybe more trade talks are down the road?
Well, I think so. I think with all the bearish news that came out and it's already priced in, I mean, some of these traders were already pricing in some of these bearish numbers. The biggest thing that we are looking at is the planting progress going into next week, especially with corn. If that planting progress going into May 15th is less than 50%, we're expecting yields to test 170 or lower. So if that is the case, then you're going to see a little bit of a bullish catalyst pushing a little bit forward. So it's a wait and see market right now.
Okay. Wheat market. Let's go there and find out how that's responded to this big number that came out from the world supply and demand estimate. July Chicago wheat down 1 3/4. It was about 1 to 2 cents higher, 427 3/4. July Kansas City wheat, it's on the lower side by 6 cents, 391 3/4. So a big drop here and a big reversal there. July Minneapolis wheat down 1 3/4 at 515.5. There was also information in this about cotton as well, and cotton just really struggling now that the talks are quiet again. December cotton down 52 at 70.05. That front month 69.42. Scott, don't go anywhere. I'll come back and talk to you about the livestock trade next. So stay with us. We're going to be back in just a moment here on the Market Day Report. Okay, let's get to the futures. Then I want to go back to the edge of the trading floor and visit with Scott Gecas about these futures. And again, a two-sided trade here today, especially over here in the cattle market. Now, not so much for the hogs, but the live cattle contracts, they're higher right now, sharply higher compared to where we've been lately. June live cattle up 160, 113.55. By the way, that is only a nickel away from the high. August up $1.95. Look at December. It's up 217 right now. Over in the feeder cattle market, it's higher now as well. August up 215, 146.63. September up 235 at 147.63. We can't say that about the hogs, though. June still down 80, 89.20. July down 38. August down 78. So let's go back to the edge of the trading floor. Scott, I can understand where hogs are still weaker because of the lack of any new exciting news out of the trade. But what's behind this cattle market? All of a sudden, we've lit a fire under this, and we're $1 to $2 higher across the board.
Yeah, well, I mean, if you look at the chart was technically broken. For the last 11 out of 13 trading days, we've been closing lower and lower and lower. So this could just be a little bit of a bounce off that 110 level, a little profit taking, a little bit of continuation. You got to remember, over the last few weeks, we had record net long positions going in. So we are also expecting the seasonal demand, the grilling season, to start to pick up stronger than expected demand, especially with the economy running on full cylinders of full steam ahead. So we expect that grilling season to pick up a little bit more and add a little bit bullish catalyst to that market as well.
Could any of this enthusiasm in the cattle market be related to what happened over in the corn market?
Well, we can see. I mean, it's definitely a factor. So, with the corn prices dropping a little bit lower, it does reduce the cost to feed the cattle as well as moving forward. So, I mean, that could definitely play some bit of a part of it. I don't think it's that big of a part in play, but I think it's more of the expectation of the seasonal demand picking up and being stronger than expected.
All right, Scott, thanks a lot for the analysis. Starting to get a bit noisy again there on the floor of the trade. Scott Gecas there at the edge of the trading floor in Chicago, and what a wild ride today it's been.